basis. So oh, sweet. It says it's streaming on Facebook Live now, Rob.
Great. Okay.
All right, I'll go ahead and get started. Let me do the screen share here.
Hey, Jason, while you're doing that, if I could just mention a few things. Okay. We're going to be contrarian to a couple other people's views, and that's okay. We're looking at this as a long haul, and so we're okay if we're wrong, right? I mean, in fact, we pray that we're wrong. We really do pray that this thing is over in 30 days and there's not much of an impact, and we can all get back to work. And I got to tell you, I got a week scheduled in Disney in May, so I'd love to be there, right? But if we're not wrong, then this is just the stuff that we're looking at, the data that we're looking at, and the business decisions that we're making. We're not saying we're perfect on this or everything is going to be correct the way we lay it out. But if we're wrong, then that means a whole bunch of more people live. If the contrarian view is wrong, then that means that they might be influencing people into some bad decisions. So we're doing social distancing. We are washing our hands like all the time, for sure. I had a fever last week. I didn't go to the doctor because I felt very well the next day. I will get tested at some point, but I have quarantined myself for 14 days. So I talked to a doctor, and she said, no ands, if, ors, or buts. You stay in the house for 14 days. And so that's where I'm at right now. And I think it's prudent, and I hope that that other people are taking some prudent measures as well. So that's how we're going to be talking about today, on how we can manage some of the risk, what we're looking at, and maybe identify an opportunity or two. Sorry, Jason, I just had to get it off my chest.
No, I think it's a great way to get this started. In the last 24 hours, I've gotten phone calls and text messages from 3 investors. 2 of them have friends or family that have tested positive for the virus, and they are expected to make a full recovery. The third, it's not looking good. And the last diagnosis they got is it is highly possible they will expire from the disease. This is no bullshit. If someone's telling you, it's like the normal flu, it's not. It is absolutely not. This person, from what I understand about their case, was in remission. They got a different version of the flu. They got pneumonia. They were recovering from the pneumonia, and then they caught coronavirus just at the absolute wrong time. They are a normal, healthy person, from what was explained to me over the phone, and unfortunately, it's really taken a toll on them. We'll pray that they'll make it out of it, but this is not something to be screwed around with. It's not some numbers on a website somewhere. You will know someone who expires from this disease. And you absolutely will. Guaranteed. And I've got this right here. Hopefully, Rob, you can see my screen from here. Can you by chance, Rob, if you're still there? It says, all truth passes through 3 stages. First is it's ridiculed. The second, it is violently opposed. The third is accepted as being self-evident. The amount of heat that I've gotten and Rob has gotten in the last week and a half. I can't remember, when did I start doing my market updates? March 1st? So I really started digging into this stuff at the tail end of February, and then I started writing emails about it March 1st. It's been amazing to me how many people have been vehemently opposed to the things I've been writing about. And it's been shocking to me, to be quite honest. A lot of these people are now moving into the second phase where they're violently opposed to a lot of things that we're saying. However, there's a small portion that are starting to accept these things. Let me tell you how well this process is occurring. Rob is actually noticing people are going back and deleting their old social media posts from a week ago. Like, if that tells you anything, people are going back and amending the things that they said a week ago, like, oh, this is a hoax, this is a that, this is a this, until it's literally on their front doorstep. So this is something we're going through this process right now. And I'll tell you right now, Rob and I wish nothing better than to be wrong in this whole thing. I really don't want to be right in this arena. This is not a happy place to be right in. So here's what I want to do real briefly. These guys over at Peak Prosperity are doing a phenomenal job in providing daily updates. And this clip is about 7 to 8 minutes. And I'm going to jump in at different places so I can catch you guys up on what's going on. But they have some fantastic data I think it's really important to share with you guys as real estate investors.
Update for March 18th, 2020. I've titled this one Consequences. This is going to be a short intro deck that I'm going to go through here, and then I've got a very special interview that I conducted. So you get to see my smiling face, as it were. And hope you stick around for that and check that out, because it's a really great interview with Peter Boghossian. He's the author of How to Have Impossible Conversations, which many of us are starting to have those, or have tried to have those of late. Really important topics. So let's go through the numbers here real quick, see what we got. Wow, Italy, 4,000 new cases, and they now have far more active cases than any other.
All right, that's 4,000 cases today. So I want to make sure we got this is daily data here.
Country in the world, and they have as well more cases per 1 million population. And remember, you don't get herd immunity until how many people out of a million? 700,000-800,000 have caught this thing. So they still have a long way to go, obviously, as do we all, before we get to anything that would look like herd immunity. Iran, way too low on these numbers. I'm sure they have to go a lot higher, and we'll look at those more, I guess, in the future. Hopefully we'll get some better data out. Spain coming on really strong here. Remember a while ago I said that we would start, we would move into all triple digits. Yep, here we are. We're moving now. This whole column is going to be quadruple digits soon, this whole thing. And then someday we're going to see our first 5-digit number up here as well, because that is the nature of an exponential disease like this. As well, we're seeing the death count really begin to rack up here for a lot of countries. The United States mounting a big, strong 1,600 increase. A lot of these coming out of New York State, and a lot of these coming out of places where testing has actually happened. So look here again at the total cases per million population. United States is not that much better than everybody else. UK, no way. This is
all right. So I want to explain some of this data. If you are looking at websites that are using American data, it's completely worthless. There are not enough. In fact, there's not even enough cases when you look at Italy. There's not even enough cases here to really draw some conclusions about how this virus is going to run through the public health system in the United States. We got some really good guesses, and we have some data, obviously, from past events. But with regards to coronavirus, this is a whole new deal here. So as this thing starts ripping through some of these other countries, in Italy, it's going through right now. But literally, this has to increase by about 15-fold before we get an idea of what it's going to take to reach that herd immunity and what the damage is going to be to the population. So let me continue here. Again, if we're using data from any of these other countries, it's probably pretty suspect because we don't have enough data points yet.
The testing shortfall more than anything. Very suspicious about this number as well. All right, so what can I tell you? This thing's exploding. Also, when we look at tests by population, so this is tests per million people. Thank you, Leos Art here, for bringing this to my attention. Also found on the Worldometer's site. I just didn't know where to look for it. So here you see how many tests have been conducted per million people. Bahrain, world's leader. I got a really nice email from somebody in Bahrain explaining just how wonderfully that government has been doing as well at really containing this thing. And it all starts with testing. If you care about the people in your country, you test, you test, you test. South Korea in the number 2 spot. No question why they're these countries, these top 3 right here, have done such a good job of containing the disease because they tested and tested a lot. And then there's this big, huge drop off. Boom. You have to go, 50% less than Hong Kong so far. Another 50% yearly drop off. And if you want to know how much your country cares about its people, you have to find them on this list somewhere. Oh, mine's missing.
So you notice the United States doesn't even meet the Netherlands rate at testing per million. So again, drawing any data conclusions from the US data set is a complete waste of time because we really don't know until we start testing the population.
So,
hey,
but
Jason,
look at this. Look at the
Yeah.
Can you we got a lot of people watching who may not know who you are. Can you just give us a quick 30 seconds on why this is interesting to you and your background, and let folks know that you're just not another fortune builder flipper
Random guy on the radio. Okay. My background is in healthcare. I've got an undergraduate degree in environmental science and chemistry. I've got an MBA in finance and a master's degree in security management. I spent 15 years working in healthcare, in particular in biomedical research. I worked for the University of Texas Health Science Center for almost 15 years. I had a handful of jobs there, but one of my jobs was emergency preparedness. We built the plans on how to respond to this sort of stuff. And 9 times out of 10, if there was something that occurred in the world, SARS, MERS, any of those other diseases, we sent our faculty, students, and staff to those places. So we've got experience in dealing with these things. And this was the one, all the discussions we would have in the office and all the planning we would do is, when is something like this coming to the United States? And it's here now. So I did that for about 15 years. It was a small portion of my job with all the other related duties I had. But this was the one thing that we talked about constantly. When's the next big one coming? How are we going to manage? How are we going to triage patients? How are we going to service our staff? How are we going to keep our staff and our faculty safe while they're having to interact with the public? And then not only did we have hospital responsibilities, but we also had responsibilities on the biomedical side. So how do we bring these samples in, test them, develop unique and novel vaccines and ways to mitigate disease? So this was very much my world. And I'll tell you, the buddies of mine that I'm still, or the colleagues of mine that I'm still friends with, they text me from time to time. I talk to a handful of these folks. They're MDs and PhDs. A lot of them are on the public health side. A handful of them are biostatisticians. So these are people who are dealing with this. Actually, the better way to put it is they've been dealing with this for 6 weeks now, 90 hours a week. I mean, they are all over this. So this is just now, I'll tell you right now, I'm not a public health professional. That is their job. This is just the things that I'm seeing on the outside looking in. And a lot of the things that I've had conversation with them is we've had a lot of conversations about what do we not know. That's really the nexus of this. That's what's happening in Wall Street right now. That's why it's a bloodbath. It's what do we not know? So making assumptions, we'll be out of this in 6 weeks or 8 weeks or 3 months. Nobody knows. When you really get down to it, nobody knows. And a lot of it has to do with this data that you're looking at the screen right now. China has not exactly been forthcoming with regards to this disease. And it's incredibly troubling when they kicked out all those journalists yesterday. So in any case, I've got some tangential experience in working with the professionals that are doing this. So I just want to give you guys a little bit of perspective because I've watched a lot of the real estate community and investing community talk about public health and where this whole thing is going, where they really have got zero experience in it. And some of the things that are coming out from our own country, I think are incredibly suspect. I'll give you a great example of this. If you look at the change in the CDC guidelines with regards to healthcare professionals, they were literally changing those guidelines hourly over the last couple of days. And what I believe is actually occurring is the CDC has recognized that their most stringent guidelines, most healthcare practitioners will not be able to implement because they don't have the personal protective equipment that they need in order to protect themselves from the virus. So that's why you keep seeing the guidelines ratcheting down, or this big push on social distancing. There's literally nothing else we can do because we can't get the supplies to those people who need it most. So what's the easiest way to mitigate exposure? It's to not get exposed at all. So that's why you're seeing these huge, like these crazy, it started 3 days ago when it was like, well, don't be in a crowd more than 500. Don't be in a crowd more than 250. Now we're down to like 10. I thought by today, heck, by happy hour tomorrow, I probably can't even be by myself. It's getting so absolutely ridiculous. And the challenge is because they really don't know where this disease is manifesting. The last rumor I heard, and it's actually up in upstate New York, is it's running rampant in 2 cells up there. But again, they don't have the testing yet to say, okay, well, what's really going on? I'll give you another example. There is some data out there that says this disease is biphasic, meaning you get an initial infection or some kind of really awful symptoms. You get the body aches, you get the you get whatever it is at that initial phase. And then then you go asymptomatic, meaning you have no symptoms, you feel fine. And then in a handful of weeks later, you get hit with this enormous lung crushing, you get all this fibrosis in your lungs, you can't breathe, you lose 20 to 30% of your lung capacity. Some people develop other complications and they die from pneumonia. And these aren't 80-year-old people. I think that's another thing I'm seeing. Oh, it's all these 70, 80-year-old people. No, they're seeing this in some people as young as in their 20s that have no previous health complications. So there's some other data out there that says that there may be multiple strands of this. Some of them are more severe than the others. So I'm not trying to scare anybody. What I'm trying to do is give you guys a real dose of what at least what Rob and I are looking at on a daily basis. And I can tell you this, I think the truth, here's what I can tell you. There's a lot we don't know. And there's a lot of questions we need to ask. And this is like, we're not even in the game yet. This is like preseason football. Like, we're not even to the first game yet. We're at training camp. The game hasn't even started yet. The game's going to start about a month from now. So I'm really hesitant to go out there and say, oh, this will be over. It's no big deal. It's all hyped up. There's no data out there that says any of that. There's a lot we've learned in the last couple of weeks, but there's a whole lot we don't know. So I suspect that the truth is somewhere in between there. But like I said, I'm seeing the greater real estate community kind of put their head in the sand and say, well, I got cash flowing rentals, so I don't have to worry about any of this stuff. And I'm like, you may have a lot more on your hands than you realize. I mean, I've been amazed how fast the federal government has ratcheted this up in the last 7 days. I mean, Monday night, I was out at happy hour. I mean, we're hanging out, having a great time. And then word came out, oh, they're closing all the bars. I'm like, are you kidding me? Can they actually do that? I mean, it was mind-blowing to me. So I'll tell you right now, and Rob has said it best. I mean, I would love for none of this stuff to be true because I'm already going stir crazy and it's only Wednesday. So, I mean, I'm ready to get the hell out of the house. I'm ready to go do something else. So thank God we got a lot of real estate because I'm going to end up at a whole bunch of our properties tomorrow because I just can't do it. So really, I just want to give you, that's a little bit of my background. And I'm just giving you some of the data sources that I'm watching right now. Again, research all this stuff yourself. But I will tell you, there are a lot of really smart, even-keeled, level-headed people that this is causing some major concern for. Like, these are not, doomsday prepper, freak show people. These are very, very smart people that are saying, you know what? I'm checking out of society for 30 days. If you guys need anything, send me an email or a text. So just want you guys to be aware of that. I'm not trying to scare anybody. I'm just trying to give you some real data that you can compare to the nonsense you're reading on Facebook or Twitter or YouTube or Instagram and the wild, crazy stuff that you're seeing on the media. Because I think some of the stuff the media is doing is absolutely stirring the pot. I still don't understand to this day why people are hoarding toilet paper. That's a new one for me. So, but I do want to add some reality to kind of what's going on, at least talk a little bit about the science that's occurring in the background. So, all right, let me get this going. We got a couple more minutes here and then I'll get over to the real estate side of things.
Between 35 tests per million and 4,900 tests per million of population. All right, looking at an updated chart here, I just drew 3 separate lines in here because it feels like, obviously there could have been a 4th line right there, but this was a line for a period of time. This one seems to be a little bit progressing at a faster pace. This one is a slightly slower pace, but still all of them are linear. Yes, this is still exponential growth in case count. Remember from yesterday, this is our future that we're facing together. How much are we going to see these curves compressed and shifted? And
all right, let me explain what this is. If you guys are in the Mr. Texas Real Estate group, I posted this in there. This is a white paper. It's got all the references in it that was produced on the 16th. And it was a epidemiologist. He may actually be a biostatistician. I'm not entirely sure. But he's somebody who can do the math. And he essentially sat down and modeled if we were to do these different things here, how much we could, quote, flatten the curve by. So what you're seeing right now is all of the things that we have implemented in the United States, home quarantine, isolation of case, closing schools and universities, isolating households and quarantining them. You're already seeing we're whipping through these things as quickly as possible. Now, what you'll notice is in the red is this surgical critical care bed capacity. And none of these things really reduce the rate enough to where that's not going to be an issue. And you'll see here, if you look down here at the bottom, we're now, what's today? April the 18th. So we're right here. Assuming all this stuff holds true, the best case scenario is this thing is going to reach fevered pitch somewhere between the 1st and the 3rd week of June. At least this is worldwide. I do not believe this is the United States, but I have to look and see which table or which chart they pulled out. So we're looking at this isn't going to be over in 8 weeks. Let me put it that way. And he actually talks about that here in one of these other slides. Let me see if it's coming up.
And of course, the leaders of various.
Here we go. This is great. So if we do nothing, but we do have some case isolation, some other things, we'll have a repeat of this same event sometime in October or November because we don't build what's called herd immunity. So there's a bit of a science here when you self-quarantine. You can self-quarantine so much that the herd, if you will, the population never really gains that immunity. So it's almost like you have a second event, and you'll notice it peaks much faster when these things when we closed universities too early, or we did case isolation, household quarantine, social distancing too early. So just keep that in mind. If we do some of these things too early, there's, like I said, there's a right amount of exposure is probably the best way I can put it to the greater population in order to grow that herd immunity.
These countries are dealing with the idea that even if they really suppress things here in spring, they'll probably just come roaring back in fall. So there is this let it happen movement, which I think we're going to explore that more in some future ones, because I think if this is the reality, then there are ways I think that we could go about more sanely getting towards herd immunity than just sort of letting it rip through our population willy-nilly. I think there's a case to be made for segregating people. Put the old over here, let the young and the healthy get it if that's the story we want to make. But first, I need to see more data to find out if even that's humane, because with the fibrotic damage that happens to these lungs of the people who have recovered, is there really a recovery around this? We still have people that have been not recovered for weeks and weeks and weeks on this thing. So maybe it's not even sane to say, let's let the young catch it and they'll be fine. And hopefully we'll build up herd immunity that way. But no good decisions to be.
All right, so let me explain what's going on. One of the things they found with this particular virus is that, and they're just, like I said, all this stuff is coming out in real time. They're doing as much research on it as they can as possible. But they're looking at blood oxygen levels. And it looks like when you get infected with this, with a more severe, or maybe you're more at risk, it attacks the lungs, which is the pathway to get oxygen into the blood. And it's causing an immense amount of damage into the lungs, in that lung tissue. And they're not sure why that is. So he actually flips through this slide real quick. So I want to share a couple of these things with you. A very high serious complication rate of 15%. So meaning 15% of the folks that get this are going to get pneumonia, and up to 5% are going to require intensive care. That's why you see all these, you see all this push for ventilators. Essentially, the lungs fail to stop working. Their capacity gets extremely limited, and they got to have something to breathe for these folks. It's much more deadly than flu, about 20 times. The RO is way over 3, maybe as high as 6, 7, and it spreads asymptomatically, meaning you don't know you're a carrier. The incubation period is also really long. They found it up to 24, and in some cases 27 days. So you could have caught this thing a month ago, and you don't even have any symptoms yet. There's no natural immunity. I don't think there's ever going to be a vaccine. I do not believe there was a vaccine that was ever brought for MERS. So some cases found smoking makes it worse or not. There is some secondary exposures, all kinds of, like I said, there's all kinds of stuff we just don't know at this point. And they're just trying to figure out.
Remember, this is not the flus. It's just not SARS. And right now, at the time of this recording, I started this just before 4 o'clock Eastern here on March 18th. Absolute market mayhem again. this bounced a lot just in the last, it was really ugly before somebody came in and started buying right before the close. I think I know who that was. But at any rate, still 5-6% down across the major indices. The Russell 2000, these small caps, no bounce for them, down nearly 12% at the time of this recording. But this is the stunner, 17.5% down again for crude oil. A big, massive loss. $22. Are you crazy? This is going to destroy all kinds of national budgets, sovereign budgets, major oil company budgets, shale companies. This is an absolutely capital destroying event that's happening here in crude oil. And of course, crude oil is the thing that tells you the most about future economic activity. Interesting to see.
So crude oil is just, it's awful. Absolutely awful. Just been absolutely obliterated. So let's get in here. Let me pull up some other stuff, and then we will get to the greater market stuff.
Jason, I shared the study.
Okay.
In the chat, and the big thing that you don't have to read it all, but in the conclusion on page 16, paragraph 3, they talk about even if we start taking draconian measures, what the death rates are going to be. So that's the thing that kind of freaked everyone out, but still no one's saying the number.
Yeah. I mean, it could be as high in the United States as 2 million. Yeah. And these are not, oh, they would have died from the flu anyway. And I can tell you that's not the case. Like it's not going to be great if those are correct. So I want to show you guys this real quick. This is what's amazing to me, this chart here. This line, this is a logarithmic scale. This line is doubling every 2 days. This is doubling every 3 days. This is doubling every 5 days and doubling every 10. So this thing is doubling. In Italy, it's averaging, I want to say 2.6. In China, and I don't know, I have to see where we're at the timeline here. In China, they're at day 26, and I can't remember what the date is on that. But they're now down to doubling every 3 days, at least where this is at. So let me play this out for you to show you where the rest of the countries are. By the way, I don't believe China's number at all. They're just simply not testing enough people. So if we head over here, let's look at just North America. You can see the United States is right here. Let's see if I can pull up. That's the United States right here. And we've just bounced off the doubling every 3 days, and we're headed back up to doubling every 2 days. So there's still a lot of these cases to come to fruition. So, all right, let's get to what's going on in the marketplace. This is dailyjobcuts.com. Let's talk about some job cuts that have already occurred. If you guys can see this here, Halliburton furloughed 3,500 people. 3 Charleston Tour Company, I don't know who that is, they announced 100 layoffs. Marriott is furloughing tens of thousands of workers. This is the 17th, Powell's Books, O'Reilly Hospitality, the Vegas Strip, a bunch of folks getting laid off there. I mean, the layoffs are coming. They're already coming. You can see a couple here, a couple there. I read a report today that said, was it Delta? Who was it that just said they took in a $2 billion loss? I can probably pick it up on Zero Hedge here.
Yeah, I believe it was Delta.
Delta is looking at a $2 billion loss just in the last 21 days. And I read through the report, they expect to ground 80% of their international fleet and over 50% of their domestic fleet. So they've got to get a huge bailout, but they're just furloughing everybody. They just cannot keep up with the amount of losses that are coming.
Can you roll up to that JP Morgan article?
Yeah.
That just came out less than 40 minutes ago, right?
Yeah. GDP forecast to a negative 14%. V-shaped recovery, so it'll be at 8%, maybe 4% Q3, Q4. So this year, with regards to, we're in a recession. Probably a better way to put that.
Yep.
We're in recession for the next 12 months. That's actually what it looks like. Now, I will tell you this. I don't think this is going to impact real estate much. It's going to have an impact, but it's not going to have a huge impact. Truth be told, we're about to contract a big commercial piece of real estate. I should be contracting that tomorrow. So we're still buying. But just know that the greater marketplace has turned into a bit of a bloodbath. In fact, let me show you guys some real estate metrics here. So I was listening to the Jet Lending podcast earlier today, and I went ahead and pulled this from Matrix. This is the last 24 hours. This is what's interesting. 421 new listings, back on market 113, price decreases 485. So a buddy of mine, Joe Rodriguez, posted earlier this morning in one of my updates. He said, hey man, I don't know if you saw it, but Open Door, which is a big iBuyer, they've got a big fund that buys retail properties. He said they marked down over 100 properties today alone. So a quarter of this is one of the iBuyers out there. Now, I'll tell you what, real estate agents and investors can talk trash about iBuyers all they want. The reality is they have some extremely smart analytic guys and gals working for those companies. If you look at their job listings, it's all number crunchers and data people, like real data scientists. So something told them, decrease the prices on these 100 properties today. So that's in the last 24 hours. This comes up for me. And I need to refresh it. This is the 3-day. So you can see the price decreases and the new listings were kind of the same. Pendings about 1172. And then this is the 7-day. You can see in the last 7 days, the price decreases don't exactly meet the new listings. So I can't believe it. Now, here's what I'll tell you. With the price of oil and some other things, you got to remember the median home price in Houston's over $250,000. This is not a marketplace that Rob and I play very much in. The vast majority of our real estate is below $150,000 as rental properties. My guess is what's causing a lot of this are the higher end properties, $300,000, $400,000, $500,000. That's why I've said in a couple of my emails, I'm like, guys, be very, very careful with flips, especially as the oil market turns like it has. Got to be super careful about what happens next. Let me see if there's anything else I wanted to cover real briefly here. Go ahead and put your questions in the box, and I will start answering those. I just saw European Central Bank, here we go, the ECB just blew through 750 billion euros. So I cannot keep up with how many trillions and trillions of dollars have been committed to this thing. But this just came out. ECB is coming out with 750 bill, which is absolutely incredible. Out of all the stuff we're doing, this is the one I'd be worried most about as a real estate person. What really caused the crash in the last real estate market was a credit crisis. That's the only thing that's got me really concerned. Maintaining enough credit, having enough credit to be able to buy real estate and that sort of thing is paramount to success in our business. Let me see if there's anything else I want to cover. Go ahead and put those.
Well, Jason, I think some good news is that the dollar is a beast at this point.
It is, and that's what's causing some of the problems in the capital markets because it's getting more expensive to buy some of that stuff. But yeah, the dollar is on absolute fire, man. It's actually one of the things that caused that $12 trillion margin call. It's just the dollar's becoming so powerful. Bill Ackman is absolutely losing his mind.
Did you see that?
He runs a very powerful. He's a very powerful investor, so he's losing his marbles right now. So, which has been kind of funny. I'm not a big Ackman fan, but he is losing his nonsense. Yeah, here it is. Delta March revenue to crash by $2 billion. In fact, it's so bad they released it as an 8Q or an 8K today. They basically told the market and investors, hey guys, we're staring down the barrel of $2 billion just in March, which is absolutely insane. This is what, you guys will love this. So all these corporations, these are all airlines, all these corporations have been borrowing money to buy their stock back to inflate the value of their stock. Now they're begging Congress and the president to give them a bailout. And as far as I'm concerned, you can let these guys burn. because that's all they just leveraged up their companies to buy their stock back to get bigger bonuses. As far as, and I'm not alone in this. Mark Cuban thinks they need to burn, owner of the Mavericks. Who else did I see today that came out and said, just let these guys burn? Jim Cramer, of all people, said, screw these guys, let them eat it. And now I realize that there's some infrastructure problems with this, but it's like, man, let them eat it. S&P, this is the cumulative share buybacks. Virtually none at 2012. Look at all the buybacks through 2019. Why would you buy back your shares right now? I mean, it's crazy. That's cumulative share buybacks. I mean,
Jason, which I think has led to this whole thing that we were talking 60 days about, is that these companies don't have any money.
No.
They're spending a lot of money buying their own stocks back to inflate the price. And, you know, you can argue that there's a fiduciary responsibility to the shareholders and no one else. But you know, we started trying to figure out why these overnight markets needed these infusions. And, you know, the kind of the realization was these businesses, I mean, we're talking about big businesses. We're not talking about, you know, Bob's Pie Shop, right? We're talking about all the big stuff that's got big lit up signs as you drive down the highway. You know, they're spending money just buying back and not having the capital to pump into the overnight markets, which was a problem that we saw Q4 last year.
Yeah, you really start seeing liquidity problem back in October. I think that's about all I want to cover. I've probably, let's go in here. This is the last one. U.S. housing starts and permits slide in February ahead of virus impact. This is a good thing for those of us who are real estate investors. It means there's going to be less inventory on the market. So they're building less houses. And we'll get to see that data get teased out here towards the end of the year. But that's a good thing actually for us because we buy existing inventory. So, all right, we got a lot of questions, a lot of comments. So let me pull up the chat. No, I do not have coronavirus. Shoot. We can see it. Love that quote. Do you think the virus has been in the U.S. since late 2019? Seeing some references to unknown V flu-like illness that couldn't diagnose. It would not surprise me if this virus has been here since 2019. I don't buy the fact that it just kind of showed up. I think it's been here much longer than that. And you're right, Bob. I've read a couple of articles where they said, you know, people were coming in for flu-like symptoms. They tested them for flu. They did not have flu, but they had all the symptoms. My guess is they actually had coronavirus. How effective do you think the proposed stimulus package will be? Man, I have no idea, Craig. I got no idea. I'll tell you, the market's not impressed. Market doesn't think it's going to do a whole lot.
Well, I would say that, Jason, is even if this is an 18-month episode, it's certainly a lot. That is shorter than the last recession we just went through, right? By 6 years.
Yeah.
So is it going to rebound in May? No. In 2 years, are we sort of already have made the stuff hopefully past us? We hope.
Yeah, I'll tell you, here's the story. Here's, I think, the problem when you get advice about stuff like this from real estate investors. Most investors who are of a good size, this stuff is not going to disrupt their portfolio.
No.
I mean, our minimum, like our fund is a great example. Our minimum time horizon is 2 years. So if less people are buying houses, they're going to rent, which is mostly the case in times like this. So our fund will actually become more valuable. Where I think this has a huge impact is for those people who are doing new construction, which is ground up, or they're doing flipping. I think that's where you're going to see a big, possibly big correction. A lot of it's going to be oil related. It will be interesting to see in the next, probably the 1st of April, when we get the March HAR report, we'll see how much
April
retail.
9th.
We'll
9th.
see how much retail's fallen. Because I'm getting anecdotal story after story after story. And I'll tell you, I was kind of surprised when I was listening to a couple of webinars today when people were saying like, well, I really haven't seen much happen in the marketplace. And I'm like, I talked to a friend of mine this morning. She had 2 deals pulled this morning. We had a big change with one of our lenders yesterday. I know of a handful of real estate investors, their deals, like literally they walked away from earnest money at the closing table. So we're already seeing the impact of this thing. You know, whether that's going to last 3 months, 4 months, 5, I have no idea. And hopefully I've shown you guys enough data where I can say, I don't know how long this impact is. But here's what I can tell you. It ain't going to be over in 8 weeks. So the CDC's recommendation over the next 8 weeks, I'm like, I think that's just phase 0. Like, let's see what happens over the next 8 weeks, and maybe we let people out of their homes.
We don't have one single project that has an 8-week timeline.
That's a good point.
You know, most of our stuff is 3 to 5 years. I'm trying to think. I think we have one flip that's 9 months.
Yeah, even our flips are 8-9 months. I mean, they're not short deals. So for us in real estate, if you're coming to me and saying, hey, Jason, what's the impact on the marketplace for real estate? I'm like, this is just going to be a blip on the radar. But for those of you who are just getting in this business, who are actually doing flipping and wholesaling and ground up, you're going to feel this today. You're going to feel this today. Carol says, as someone from China, I know this virus is not a flu. It's much worse. But no one believes me until this week. Without the most strict quarantine lockdown measures, it's going to get really bad in the U.S. Carol, I totally agree. You know what? Let me pull this up. Let me share with you guys something. I pulled this up the other day or this morning. China cities. Because I don't think most Americans get this. Here it is. We think we're big bad America. We got these big cities. Houston has, I want to say, what's Houston? 3 million people? Houston population. 2.3 million. So let's go down, and that makes us the 4th largest in the United States. Keep that in mind. 2.3 million, 4th largest in the United States. What would that make Houston in China? That would make Houston number 48. Houston, Texas would be the 48th largest city in China. So what a lot of people don't realize, let's go up to, where are they at? Where's Wuhan? Here it is. Wuhan has 8.3 million people in it. And when that virus, that's why I don't believe the Chinese numbers. Because that's just the city. That's not the entire region or the state or the province of Hubei. I don't know how to pronounce I'm going to butcher the Chinese. But, and these people aren't living in sprawling estates up near Rob in Cyprus.
Yeah,
3,000 square foot.
Anyone this way.
Yeah, 3,000 square foot house on a 15,000 square foot lot. These people live on top of each other. And if you're telling me that they're going down to the daily wet market that probably has 300,000 people out where they're chopping up animals and blood everywhere, it's a total mess, which is how these diseases get, how they jump from animals to humans, which is where this disease absolutely came from. Came from that damn wet market there in Wuhan. You guys want to Google something up? I won't do it now because if you're going to eat lunch later or eat dinner later, you're not going to be able to handle it. It's Google wet market in Wuhan, and they are absolutely filthy. So that's when you get a lot of these diseases that jump from animals to humans, because a lot of those animals, because in these wet markets they eat anything. Dogs, weasels, rabbits. I mean, everything they can find that is for sale in these markets. Yeah, and they're all on top of each other. And so the problem is that some of these animals are used in medical, now not these particular animals, but the animal model is used in medical research because it makes such a great model before human trials. So it's not far-fetched that if there are enough exposures, eventually this stuff, these diseases are going to adapt to the human body, which is absolutely what happened with this last virus. And it's going to happen again. Look how big these cities are. They're gigantic. You get enough exposure, enough random exposure, you will eventually have a disease that jumps from a human, or jumps from an animal to a human. And
hey Jason, so we've talked about a lot of things here. We're gonna get economics, but I think we should just wrap up on the virus with the real issue is just not enough hospital beds, right?
Right.
So if we believe that model that came out of the UK a day or two ago, then we should assume that in 30 days, Texas will have 270,000 confirmed cases.
Correct.
And of that 270,000, we're going to be looking at 41 to 45,000 beds that are needed in the hospital in the state.
Correct. And that's of the, just because you're in the hospital doesn't mean you're the most severe. So what will eventually happen is the most severely, well, let me back up. You and I were joking last week, and you said, man, I really don't want to be on a gurney at Reliant Stadium.
Yeah, I don't, man. No way.
And you said, I think your classic quote was, and you know I'm going to be down in the end zone. I'm not even going to have a good gurney at the 40-yard line. So that's what's going to happen. If this thing really gets going, now I pray it doesn't. If this thing really gets going, they will set the triage up for the medical center in and around Reliance Center. And you won't even be able to get into the medical center unless you are damn near dead and you need to be on a ventilator. Everybody else is getting set in these temporary hospitals, these tent cities. Trust me.
Right. And, and then you're working on with a National Guard doctor who's been on a 12-hour shift, and nurses. And I think part of the issue is just the average acute care, right?
Yeah.
Like, it's really going to suck in the next 6 weeks if you break your leg.
Well, that's a good, yeah, pray to God you don't get in a car accident.
Right.
You don't have some emergency surgery. The mayor of Baltimore came out today and said, stop shooting each other. We need the beds for virus patients. So it's not going to be great. But like I said, it's temporary, sort of temporary. But there is a bit of warning here. There's going to be some crazy things that happen in the marketplace, and we've already seen it. So our good buddy Glenn, this is what he posted today. He's up in Jersey, and he said existing loans, we're deferring all monthly payments until July 1st. They just came out and said, forget it. We're not collecting payments. Just get these projects done. And then all new loans and borrowers, like they're gonna go ahead and say, yeah, we'll do the deal, but we're gonna defer 3 months of payments. And here's why. And Rob, you can speak to this better than I can. We're already having supply issues with materials.
Yeah.
So we got the workers, but our material costs, we're having to go to other providers, and it's becoming more expensive for us to do rehabs. I mean,
we started seeing some of that delays in the supply chain for, because we do order through Amazon, and we're already kind of, stuff that normally takes 48 hours to get here is a week. For those of you who don't know, the Schneider meter boxes and panel breakers and weatherheads are extremely cheap on Amazon. So we typically buy all our rough-in metal electrical stuff from Amazon, as well as faucets and things like that. And, there's a little bit of a slowdown there. All our workers are super young and super healthy, and they're going at it. And we just said, hey, man, as long as we're letting them crash at the house, right? So
yeah,
you guys can stay here. We're totally cool with it. It'd be really smart not to be going to bars and coming back here.
Well, let's put this in perspective, because I had somebody tell me today, well, I'm not seeing that. How many crews and how many projects are we in the middle of right now?
Oh, boy, too many. We've got, let's see, 1, 2, 3, 4, 5, 6 crews, and then I've got, a bunch of other guys. So I probably got 10 different things happening at any given point in the day.
So I heard from somebody today, said, Jason, well, it's not that big a deal, man. I just had $15,000 supply show up to my job site. And I'm like, yeah, you got one job site. We got like 20. So we can already see that. This is where things start to get really real for somebody like us, because we do so much real estate, and there's so much volume that we see it way before everybody else does. You got one little house you're flipping, there may be a minor inconvenience. But when you start doing the volume that we're doing, these small changes in the marketplace have a pretty big impact, not on the single job, but on the total.
Yeah, like we buy 48 doorknobs at a time. right? And so it's going to be a challenge, we believe, in the next couple weeks or months, because the focus is going to be on medical care and essential needs that we may not see. And then, of course, the backlash from China catching up to us. I might have to go to 3 Home Depots or wait for Home Depot to put everything together for me. And so I don't think the doorknobs will be impossible to find. No, I just think it's going to slow down my supply, meaning I can't call ahead and it shows up at Home Depot, the next day or a day later. It might be a week or so before these guys have mustered together all the doorknobs from North Houston, because I need 50 Defiant doorknobs, right? So we're expecting that. We're trying to deal with that. We have a letter going out to all our investors and private lenders and hard money folks, and just let them know the stuff we're seeing.
Well, and I think the other thing too is it seems like it's totally random too. Like it's stuff you wouldn't predict that would be, out of stock. It's kind of funny. I actually went to the grocery store today because I needed some Gatorade for this cold I've got. And I'm walking down the aisles, and literally the rest of the store, they had a sale on spare ribs. I almost bought like 4 racks of spare ribs. They looked fantastic. Anyway, so I'm walking around the store. The only thing they're out of is diapers, baby formula, water. I didn't go down the toilet paper aisle. Oh, and cleaning supplies, as if nobody was cleaning their house before. So everything else is completely stocked, but those shelves are completely bare. It's the most odd thing I think I've seen in a while. So
we have some other questions here, so let's just
go down the questions.
On out. Carol asked, why the real estate market wouldn't be impacted so much? I don't quite understand. Couple things from our perspective, Carol. One, we don't get into the real estate market to make a 90-day profit. We're in the real estate market to make a 5-year profit and to sustain along the way. Part of the things that we're having investor lunch and learn, and I'll throw that number back up for Brian. We're talking to all our investors on Friday at noon, and one of the things we're going to tell them is that our fund is sitting on a lot of cash, and we've designated several months reserves at this point, because we feel like, hey, if something bad happens, we want to weather 90 days, maybe even 120 days, and we certainly are in a good cash position for that, as well as new investors bringing us money this week so that we can go out and pick up other properties. So, Carol, we don't look at it as a 90-day or 180-day flip, which a lot of folks in real estate do. We're buying and holding for 2, 3, 5, even 7 years. And so when we're sitting in that position, that's great. Most of our apartments that we do, Carol, are equity, meaning we don't have a loan on them. We have investors into the syndication. And because of that, we don't have any debt service. So if, and again, we've got about 54 units done this way. If the tenants aren't paying, it's something that we're going to have to figure out what we're going to do on our side of things, but it won't impact our ability to keep the property. Second, the things that have been coming down and we're hearing is a grace period on foreclosures, a grace period on mortgages, giving everyone in the country $1,000 like every month, and then reminding our tenants that, hey, we know you got $1,000 and we expect a portion of that, allows us as buy and hold investors to really be in a stronger position than someone who might be flipping a property or even more detrimental, trying to find the right buyer if you're wholesaling. So that's why we feel like our portion of what we do in real estate is pretty strong. I'll tell you what's not so strong that we do have concerns about is our Airbnbs. They're getting affected. We got a cancellation today. We did get 2 bookings yesterday. On Monday and Tuesday, we took in almost $3,000, so that's good. But the Airbnb is hospitality, and that marketplace is getting hurt. We are reaching out to hospitals and anything else that we can think of where people might have to get some temporary housing. So that part of it is going to get affected, that short-term rental market. We think the short-term flip, I want to buy and put some paint and carpet in, might not be. This is why Jason is highlighting, hey, Look at the price reductions. Hey, look at the ones that came back on the market, right? What happened in the last in the last, so that 2000 is actually 5% of the marketplace took a price reduction, right? 5% of the active listings on HAR took a price reduction in the last 7 days. And so that's going to affect your numbers if you're trying to flip it. But when we say that we think real estate is good, it's because we come from a point of view of buying and holding, and we're really not looking to make money for, you know, our big paydays come 3, 5, 7 years down the line. Hopefully that makes sense to you.
There's an anecdotal story in our group, in our Facebook group, and I just responded to. The guy said, "Hey man, I almost had a deal bust out on a deal that's supposed to close the next couple of days. He was just going to walk away from his earnest money." And he said, basically, I reduced the cost, or reduced the price by 3 months of carry, plus what I think it might be worth if it would have a reduction in value 3 months from now. And the deal's back on, we're going to close it. He said, I just figured let's close it out and get it done.
Yep.
So if your time horizon is less than 12 months, if you're flipping and wholesaling and doing ground up construction, this might have an impact on you. But for guys like Rob and I and the investors in our fund, we're long-term investors. So we're probably going to pick up some better deals. I'm hoping in the next couple of months, in the next couple of weeks. Like, I don't know if I don't want to talk about it yet because I want to sign the contract tomorrow, but we're getting a really good commercial real estate deal.
For land value.
And I almost want to guarantee it happened because of coronavirus. Like we were close on it, but I think this coronavirus thing just scared the buyer off and we're going to pick it up and it's going to be great.
Yeah, we're essentially buying it at land value.
Yeah, we're buying it at land value with a beautiful building on it. And once I get that contract signed, I'll talk more about it here in the next week or so. We're really excited about it. It's going to be a great deal.
Richard asked, what if the foreclosures are canceled for 6 months to a year? How will that affect real estate? What's your thoughts on that, Jason?
Wait, which one? I got two windows open here.
I just asked you and deleted it. So.
Oh, okay. Yeah, if you're not going to be able to foreclose, I mean, it's going to be.
And I guess the big question is that on owner occupied? Or is that on every mortgage?
Yeah. You know, I think the question is, how's the economy doing in which foreclosures are being produced? In other words, so is it because these people lost their jobs and they can't find another job and that job's never coming back? Or is it a temporary displacement in work? You know, I don't know. It has happened before. And usually if you stem foreclosures, the values have a tendency to maintain their price points longer. In other words, they're more valuable longer as opposed to flooding the market with foreclosures.
They hold it, yeah.
Yeah, they hold the value. So, but we don't know. You know, a year would be a little long. Even 6 months would be pretty.
Someone asked if we know if mortgage payments are going to be deferred. I think we're going to see some answers on that in the next. I don't think the mortgage issue, the foreclosure issue, is a hot item for the next week.
Yeah.
I think we need to see those unemployment numbers kind of explode out. I mean, Vegas shut down, right? They show the picture of the dark strip, which is
crazy.
My favorite city. And we need to see some of that economic data come April 1st, what the jobs look like, what the losses look like, where we're at, with a whole bunch of other things. And I think then you're going to be talking about it. I would expect that everyone here should be prepared to make an April 1st mortgage payment. After that, then we might see some relief. But in fact, Jason, we've already started making April 1st payments.
Okay.
Airbnb money came in last night. I said, pay 2 mortgages.
Yep.
So we are we're fully expecting that April 1st is going to happen. After that, we may see some lightening up, some relief. Then again, as an investor, it may not be for me. It may only be owner occupied, like your homestead.
Yep.
So, and then we've got a lot, and the problem is, and that was on Tucker tonight. If you watch Tucker Carlson, I try to watch him as much as I can, and he, for better for worse, I actually like watching that show. He said the problem is we sold debt it exchanges hands so many times. So how do you stop, right? And so I don't think that's a problem that gets resolved. It's a lot easier just to give everyone $1,000 than to think about mortgages and foreclosures right now.
Yeah.
Gold and silver. Gold took a hit today, Tiger.
So here's what I think is going on in the gold market. It's very interesting. A lot of those gold futures are just, it's paper gold. You know, it's an ETF, it's those sorts of things. It's not physical. So I think what you're seeing is the folks who are taking, that are in gold, in like an ETF or a future, they got options, they're selling all that stuff to raise cash. So I think the gold number is actually kind of low, but I'm going to tell you right now, that's getting into speculation. It's way out of my league, but that's, as someone who watches this stuff all the time, that's what I think is actually happening in the gold market. I wouldn't necessarily invest in silver. Gold always seems to make a little bit more sense, but again, I'm not that guy. So
Jacob has 2 questions. He said he made an observation. A lot of home builders have switched to appointment only and closed a model home. Yeah, they've been through this before. Last time they laughed it off and got crushed. You know, I think a lot of those guys who are job site supervisors were probably running really, really, really big developments 10 years ago. They're there because of the experience, and they took it on the chin back then. So I would assume that home builders are going to be amazingly prudent and are probably stopping and slowing things down that haven't already been paid for. That would be my guess.
Yeah, no more broker open houses at the new construction development.
No, I don't think we're seeing much of
high-end wine and cheese. There's no free eating and drinking at 2:00 in the afternoon for brokers anymore. So I think that's pretty much gone.
Yeah, and Jacob asks, are you concerned about tenants' inability to pay rent as job losses increase? Yeah, we're concerned about it. And what do we do with missed payments? Well, you know, what that really means to me is, listen, we're smart enough. We have a little nest egg. Personally, Jason's got some nest eggs. We're okay. You know, we still have, we follow that Susie Orman 6 months. You know, we're okay. So I'm not worried about profit. It's the ability then, therefore, to cover my mortgages. And as I explained, we've got 54 apartment units that don't have any debt service on them at all. So it's a matter of, hey, the rent's $750. We know you're getting $1,000 check from the government. We'll take $500 this month and backload $250. Right? We can work that out because we don't have debt service. That's how our syndications are set up. These are the things that we've offered our investors now for the last 3 to 4 months and become very, very popular because we're able to raise money without debt service. It's all equity. And then folks that, you know, we show them how we're going to create cash flow and make money in the big haul. Our investors' great big payday, and Jason and mine's big payday, comes from the sale in 3 to 5 years, not necessarily a missed rent payment here in April or May, right? Yeah. So definitely on the apartments, we definitely want equity. We learned our lessons last year. We don't want to have any debt service. Now our fund is debt service. In fact, it's set up for only debt service on single family units 1 to 4, and we're cash heavy on that. We have a reserve. Right? We have every opportunity and fiduciary responsibility to keep those houses as best we can. And so we feel very confident that the fund is going to perform, and we're super confident that our syndications are doing very well because they're equity. So for us, if someone misses a payment, it's not critical for us, but there definitely needs to be a conversation that is had. Our investors are not going to be happy if we just let everyone not pay. But certainly our investors will understand that we're going through something pretty big here, and April, May, and June just are unknowns, right? So for us, we should be okay based on our cash reserves in the fund and the fact that we switched all our apartments over to equity. What will happen to tenants that don't pay rent during this time? You know, we'll try and work with them, but if it's just taking advantage of the situation, then the courts will decide. Right? If everyone's getting $1,000 from the federal government, then for sure I can get half, right? Right? Your house is your biggest thing, your shelter, right? We should be taking that $1,000 and running out and buying sneakers and FIFA, PS4 games and things like that, right? Please clarify. We should be careful with flips regarding declining oil prices. Oh, well, Curtis, what we're talking about is if you're flipping in that, and Jason, you can jump in here, in that $250,000 to $500,000 range, typically your buyer is in one of three industries, right? Energy and the surrounding businesses around energy, and I would put logistics in there. You know, hey, I work for Halliburton. Hey, I work for Exxon. Hey, I work for this big transit company, you know, around energy. They're going to work in the medical field. It's a huge market for medical and research here, right? Or they're going to be doing some government services. All three of those are greatly impacted by our economy where we're headed right now. So if you're a doctor, you're probably not thinking about buying your new house in Katy for $365,000. You're going to put that aside. If you are one of the 3,500 people just got off from Halliburton, well, you know, the house in the Heights isn't really in your in the cards right now. So if you're flipping at that range, we think you should be cautious. If you're flipping below 250, that 150 to 250, I think there's always a demand for starter homes, and the ease of mortgage rates will help first-time home buyers and those that are just wanting to move into a 150 to 250 house. That's what we're thinking. Jason, am I off on any of that?
No, that's perfect. I think that works perfectly.
How come the 27-day incubation is not in the media? Jason, can we find that source and put it up in the Texas, Mr. Texas Real Estate Group?
I sure can. I can tell you why it's not in the media. And then he talks about the 15-foot safe distance instead of 6.
Yeah.
And
Richard, we'll find that. If you're in Mr. Texas Real Estate Group, please just check there. We are happy to provide every single source that we are finding.
yeah, I can pull it up. I'll pull it up when I can find it, and I'll put it in the page.
And then also put the new home starts down in February.
Yeah, I can do that. Let me. That one's easy to pull up. It's right here, I think. Yeah, I'm.
Yeah, Jeff. The president's directed HUD to suspend evictions and foreclosures through April, but remember, HUD backs Fannie Mae and Freddie Mac. But there's a whole bunch of other conventional loans, jumbo loans, non-QM loans that have not had that presidential direction. Will it go away when it gets warmer? We don't know. We really don't know. We hope.
I read
The answer that the virus disappears in the summer is we hope. Longer exposure to UV rays has shown that the virus does dissipate quicker. So that's sort of a natural thing. But the answer is we hope, right?
What other questions you guys see? Is it strange that these big CEOs are all stepping down? Oh,
That's a great conspiracy.
That's a great observation, because the most number of CEOs that have ever stepped down in the history of big companies has been the fourth quarter of this year. Very fascinating. I hope it doesn't have anything to do with what's going on, but it is very interesting.
Wow, they all took off with John Galt, right?
Yeah, that's right. Yeah, they just checked out. It's funny.
Guys, if you're interested in working with Brian to talk about it, we have an investor presentation on Friday. You're going to need to talk to Brian first to make sure we have a relationship or you qualify. But we'll be going over our syndications, our fund, and some of the other stuff that we have going on. We actually have a first position loan we need, Jason. So that's the first time in a long time. But that's on a buy to hold, fix and hold. That's probably a year term we'll need on it, and we'll need a 6-month option to extend. So first time we've been actually asking private lenders in about 8 months.
Yeah.
And the only issue is it's 2 properties on one joined lot. So in order to do it right through the lenders, we'd have to split the lot first, and we're not interested in doing that. Yeah.
Yeah,
And
Jeff,
then,
that's a good point. Those MERS cases continue through 110 degree Fahrenheit in Saudi Arabia. You're absolutely right.
And the housing start one they're looking for. Make sure you.
Yeah, they're both in there. Yeah, I dropped them both in there. So if you guys want to see them, they're in the Metro Texas Real Estate Group.
Any other sources you guys are looking for? Let us know. A couple more questions came. Thank you. I appreciate it. Do you think China will attack? No, I don't think it's prudent for anyone to do anything. I think I honestly believe in times like this, it is the better angels of our nature step up. We have fear because of unknown, and that's what happens. A lack of information produces inner speak, and sometimes that crazy talk gets posted up on Facebook or Twitter, and now it's out there, and people are responding as if. And I think that I am self-quarantined, but if my neighbor fell down across the street, I would run out the door to help him, and he'd be happy for it. And if my neighbor came to me and said they're out of toilet paper, I'd happily give them toilet paper. I don't think we debase and become this rabbit society while supply chains and there is a cohesive government in place, whether you like them or love them. The government is doing what they need to be doing. Whether you think it was fast enough, that's something that will go when they do the investigations 2 to 3 years from now. But again, I think as Texans, as Americans, for sure, we get through this. I was joking around. I was talking to Matt Downs today. For those of you who know Matt, and he's like, Robert, I don't know what I'm going to do. I'm a salesperson, but this plant and this plant and this plant said only essential employees are allowed in. Like the refineries are, just don't want non-essential people coming through the doors to keep their people safe. And I said, well, Matt, you could be drafted into a factory to start making hand sanitizers and surgical masks, or you can see some of these restaurants being popped back up to make meals for people that are self-quarantined. When this country gets down, for always, we have responded. And we're talking, 250 years of getting our shit together and rising to the challenge. It is when we are fat and lazy and the good times that we fuck things up. But in crisis, Americans don't fuck around. And so if I can leave you with anything tonight, just know it. You are not going to be shooting neighbors. You are not going to be, you're not going to do any of that stuff. You are going to help people. Because that's what we do. We're the loudest, most obnoxious people on the planet, but we're also the most generous. My joke is, in LA, they'll sit there with you and they'll commiserate and tell you how horrible it is that you got a flat tire, and oh my God, they really feel you. We have empathy. They can relate. They can tell their own story, right? But they're not going to help you fix your flat tire. In New York, they will curse you out that you made them stop on their commute and they've got to get out of their car, but they'll help you fix your flat tire. And here in Texas, they'll be compassionate to you and relate, and they'll help you fix your tire. For those of us who are blessed to live in this state, quite frankly, fuck off if you're doing this whole prepper shit. We've got to help our neighbor. We've got to help the people that we've been involved with for years. And I think that we will. I think we'll get through this. I think it is a lot longer than most people are saying. And I think when we come out of this, we will have a national character that is better than we've seen over the last 12 years. I'm going to get off my soapbox now.
Well, with that, I think that's a pretty good way to end the show.
Excellent. All right, guys, take care.